if you think about the real world, as excited you may be about crypto, the reality is there's just a ton of money moving in fiat still. What that means for businesses is it's very unlikely that any business will completely shift from all of their fiat infrastructure to crypto. In the grand scheme of things, I think most businesses will need to navigate both worlds.
Welcome back to FinTech Layer Cake. On today's episode, a chat with Davi Strazza, Chief Business Officer at Lightspark, the company powering over 15% of Coinbase's Bitcoin transfers. Before this, Davi spent a decade at Adyen, scaling its payment volume from about $30 billion to over $1.3 trillion.
The one thing about fintech is if you are a global business, if you need global reach, no single processor has coverage across every single market or can help you across every single change in regulation, can access every single payment method out there. And so it's very rare that one large enterprise can rely solely on one single provider. And so if you are selling financial infrastructure, you should be always looking at, okay, what are the wedges? And maybe I'm a startup, I'm more nimble, I'm faster, more agile, and I'm operating at the edge of innovation. And so that's the wedge.
What's one thing that you think people in fintech aren't talking about enough?
I don't want to say that people are not talking about this because they are, but
Davi, welcome to the podcast. Excited for our chat today. Lightspark is doing a lot of exciting things that we're going to cover. First, would like to start out talking about your background a little bit, though, because you have a pretty interesting background. So you spent over a decade at Adyen, helping the company grow from, I think, around $30 billion to over $1.3 trillion in annual payment volume, which is a massive growth. You ran Latam and then North America as president back-to-back. Those are different animals, different markets. One's high growth, underpenetrated. The other's more mature and more saturated when it comes to payments. What part of your Latam playbook did you have to throw out when you came to run the North America piece?
Yeah, no, thanks for having me, Reggie. Yeah, super nice to be speaking. Look, yeah, those are very different animals, as you said. I think Latin America is a fascinating market. I think lots of people look at Latin as one single block, but in reality, it's so different. If you go to Brazil, is one thing. If you go to Argentina, Colombia, Mexico, it's a completely different thing. And so it's a fascinating region. There's just lots of really exciting stuff going on there. But there's also a lot of overlap compared to North America, especially in financial services. I think financial services is a very regulated space. It's very complex. It's very dynamic. There are lots of stakeholders, no matter, again, where you look. And so I think there's significant overlap. Right? So I don't know if I completely threw out anything, but doing business in Latin America is oftentimes very relationship focused, and what I find is that in North America, the cycles are even more rational, especially on the enterprise side, like the provider selection and everything else. It's a very pragmatic exercise, which I really appreciate. I think there's a lot of value in even if you are in the service provider side, to know that, again, you are being selected by the value that you provide as opposed to relationships that you hold. And so, again, don't think I necessarily threw out anything from my time in Latin America, but I think there's definitely a more pragmatic, I should say, side of doing business in North America that I appreciate, and I think I had to adapt to in some capacity. But again, not that wasn't necessarily the case in Latin America as well. So
sure. And selling Adyen to global enterprise companies like Microsoft or Uber means that you're convincing them to rip out an incumbent processor sometimes that they may be working with for a while, or that has decades of established history. How do you unlock that conversation? How do you get a company to go with Adyen obviously has a great reputation, but how do you convince the decision makers at like a Microsoft or an Uber to go with a company like Adyen as opposed to an incumbent that's been around and well known, maybe slower but well known and maybe more trusted?
Yeah, look, inertia is a very powerful force, and it's even more powerful in fintech. I mean, if you look at Adyen and Stripe and a bunch of other players in the space, I mean, no one argues that these companies haven't been phenomenally successful over the last decade or so. But still, if you look at payments as a whole, there's like a gigantic volume of business that still runs on very legacy, very traditional infrastructure. And I mean, the rational thing would be to, or the logical thing would be to see those volumes moving to more modern technology, but that's not happening because again, there's just so much complexity that is inherent to how money moves. And so it's difficult for large enterprises to necessarily rip and replace that infrastructure, even if they really wanted to. On the flip side of that, the one thing about fintech is if you are a global business, if you need a global reach, if you're dealing with volatile markets, if you're dealing with changing demand, it's very rare that one single processor could help you. No single processor has, coverage across every single market or can help you across every single change in regulation, can access every single payment method out there. And so it's very rare that, one merchant or one large enterprise can rely solely on one single provider just to meet their demand alone. On top of that, you also have redundancy. I mean, Adyen, Stripe, again, all of those large players, they have a phenomenal track record, but they still go down. And so, as a business, you don't want to rely on 100% on one single processor. So, if you are on the other side of that equation, if you are selling financial infrastructure, I think you should be always looking at, okay, what are the wedges? Like, what are the different things that maybe I can offer and, the traditional player cannot? And maybe I'm a startup, I'm more nimble, or I'm faster, more agile, and I'm operating at the edge of innovation. And so that's the wedge. There are other cases where you want to rely on just reliability alone. You want to be able to offer a solution that is presumably more stable than the incumbent in a certain market that is more difficult to operate. And there are other cases where you just benefit from regulatory changes. And so you adapt faster to those changes. You can help merchants navigate those changes in a more effective way, and that's your wedge. And so it's not like one thing, I'd say. Enterprise cycles are very multifaceted, and that applies to both like the people you talk to, but also again the different parts of the business that you're touching, the different pieces of infrastructure that are changing and being replaced. And so, not a single, not a silver bullet for sure.
Yeah, find your strength versus the incumbents and lean into it. Um, I know that you've said that Adyen's culture shaped how you think about leadership, specifically with speed and autonomy being a pretty core aspects. Could you give me a concrete example of like a decision or situation where that speed and autonomy is like kind of key culture aspects led to something that may not have happened at a different company?
Yeah, well, I talked about inertia, right, and what blocks businesses from changing their service providers. There's also a fair bit of inertia inside companies in terms of how they run their business, in terms of how they pivot. And I think that's perfectly natural. I think every company has some sort of challenge with inertia. Like people just naturally react to change. I mean, people get used to do things a certain way, and when change is there, I mean, it's not that everyone embraces it. And so, um, I think Adyen and definitely Lightspark now at an even more intense way embrace change very very successfully. I think during my time at Adyen, there were several situations where I guess we had to look at how we did things inherently and asked ourselves like whether or not those decisions or the way we ran things applied and it continued to be the most effective way to do things or not. And we figured that the answer was no. In my experience leading the teams in Latin America and North America, and at a few times we had to change the axis of the organizations. We had to move, for example, from a very generalized sales organization to a very specialized sales team, and that has downstream effects in customer service and operations and even product to a good extent. And at a surface level, those things may not seem very very complicated, but again, when it comes down to it, they can become quite complex, especially at scale. And so, naturally, again, people don't react to those things as like, oh, okay, why not? Let's just do it. I mean, there are effects, there are definitely ripple effects internally, but also impact to your customers. And so we thought those things through quite a bit, but more often than not, the fundamental question we asked was, okay, what's the best thing we could do for our customers? Forget about internal drama, internal challenges. Like, what makes sense for the customer, and that's what ultimately was the driver behind the decision. And I find that to be, again, sometimes easier said than done. Most people react to change with hesitation, and even when, again, change may be the best thing you should do for the benefit of your customers. And I've been fortunate to work at Adyen where there wasn't a big hesitance when it comes to change. And for sure, Lightspark, I think we're dramatic changing things to help our customers pretty much on a daily basis here. So I've been fortunate from that perspective.
Yeah, I know I've seen a few of those sort of maturity points that let they kind of go-to-market team operations like other teams. And yeah, there's a lot of knock-on effects that you can get wrapped around the axle on, but I like the framework of like what's right for the customer. Like orient on that as you're thinking through like what the level of granularity is. Um, so Brazil, is notorious in payments for having Pix, one of the most successful real-time payment systems in the world. And you were you were kind of running Latam a bit while Pix was being rolled out and built out. What did Pix's adoption tell you about what it actually takes to shift payment behavior, which is a really hard problem, but like, any lessons from watching Pix evolve in Brazil?
Yeah, Pix is fascinating. Back in the day, people used to refer to the central bank in Brazil as the startup of the year because no one had ever seen like adoption of a fintech product like we saw with Pix. But I think it's easy for anyone that is not in Brazil to look at Pix and be like, "Wow, I mean, this thing exploded and it's phenomenal and it got to massive scale." And so it's probably easy or possible to do it in other parts of the world. The reality is there's a very important element to the big story, which is the top-down move from the central bank, right? The central bank just um, essentially built Pix and built the infrastructure and then went to every single financial institution in Brazil and said like, hey, you got to adopt it and here's the deadline. Um, that doesn't make it easy for consumers to adopt it, though. Despite, again, massive news and marketing around the solution itself, consumer adoption is I would argue just as difficult as just enterprise adoption. And what I've seen over the years, whether it was in Brazil with Pix or even here in the States with a bunch of new payment methods, is it often takes a big merchant, a big trusted brand to launch something and educate consumers before that happens at scale, before consumers just start to get more friendly with the idea of using that method at scale. And we've seen this again many times in the past. Think of Uber. Like, people trust Uber and today take it for granted that you just walk in, walk out, and then a charge is going to come up in your card, and that's fine. And they trust that process. Um, those are things that it takes an Uber to get people to trust tokenization, to trust that they can just add their card details to some app and be fine with the idea that the app can just push charges to their card without their express approval every single time. And so I think, again, whether it's with Pix in Brazil, although it's a slightly different story because of the top-down from the central bank, or with things like Pay by Bank and more recently crypto in the States, it oftentimes takes like a big consumer brand to educate consumers around how to use that payment method, around what to do when things go wrong, when they need charge reversed and things like that for a payment method to really scale. I do hope that we'll find a way to have an equivalent of Pix in the States, like scaled across the board. I think FedNow and RTP are great. I think we're seeing headways, but it's far from the reality in Brazil in terms of adoption of those rails as the predominant rails for both the P2P use cases as well as the B2B use cases and everything else. So we'll see. Time will tell. I think different dynamics at play. But again, I don't think the industry sort of can be successful alone without a big merchant that holds the relationship with that end consumer, educating the user base.
Yeah, that's a great insight. Takes a known trusted brand to change consumers' behaviors. Um, okay, now we got to jam about Lightspark because you guys are doing a lot of exciting stuff. So, first question on Lightspark is, walk me through an example of a use case that Lightspark enables. Like, I know you guys power something like over 15% of Coinbase's rails, your Lightning Network. Like, help me understand what the product that you guys power tactically looks like in that arrangement or any other arrangement.
Yeah. Now, we've been through a journey. Like I said, there's been lots of great change at Lightspark, aiming to better support our customers here. So initially, we had a fair amount of focus on building and enabling Lightning for our customers. And so Coinbase is an example of that. I mean, if you're moving Bitcoin on the Bitcoin network, that is very slow. It's costly, and it doesn't really scale nicely. And so Lightning emerged as a alternative to that. And I think we've done a pretty good job helping businesses like Coinbase to access the Lightning Network and then benefit from lower cost, faster Bitcoin transfers. And so, I mean, that is a great example. We're very proud of the partnership with Coinbase. Um, but then from that point, we invested a lot in building connectivity across all of those local real-time payment rails. Pix is an example. Ensure that someone in the States can easily move money to someone in Brazil or in India and use crypto rails to power those transfers. I think we've done a great job there. SoFi is a great example of a neobank that adopted that technology and today allows their users to do so very, very effectively to send money across markets. But then more recently, we expanded to B2B as well. And so if you are a marketplace, if you are a global HR platform, if you are a big consumer platform, and you are in the business of moving funds to the people that are earning revenue in your platform, traditionally, those players relied on very legacy rails for that. I mean, if you are again paying a contractor in Brazil, or if you are paying a creator in Asia or in Africa, getting money to the hands of those people have been very, very challenging outside of the core economies. And we've built a phenomenal solution to address that need, to close that gap. And so if you are, again, a platform running on Lightspark today and you are US based and you need to pay out to folks in Argentina, in parts of Europe, and in APAC, in Africa, you can easily just connect to our APIs and then go from USD to Brazilian reais or Mexican pesos or rupee in India very easily, real time, and we use crypto rails to power those transfers. But beyond that, we can also pay out in stable coins, which is a very popular choice in many parts of the world where there's volatility in their local currencies. And then the last move, beyond all of the global money movement side of things, is what we launched a couple of months ago, Global Accounts, which is not only helping businesses to move money, but help them to offer the endpoint itself. And so back to that example, if you're paying out a creator in Argentina, instead of just moving funds to a third-party bank account or to a crypto wallet, you offer that creator an account, a global dollar account that they can use as stored value. They get a card attached to it, a Visa card attached to it that again they can use to spend those balances. They can off ramp to Argentinian pesos as they want. They can send money to their colleagues or friends. They can pay for it. I mean, it comes with a lot of really interesting capabilities. And so, as I look at our journey, I think we went from a very Bitcoin focused company that started spending a lot of time on Lightning to becoming a global money movement platform across fiat, across stable coins. And now we're just offering like a full-fledged financial infrastructure for businesses to move money across the globe, but also offer accounts and cards and things of that nature to their user base. So quite a fascinating story if you think about the length of how long we've been around, and especially the last iterations I think took place in the last couple of quarters, and so it's been quite busy in a good way here.
Yeah, no, it's exciting to see the iteration. I know like Lightspark just keeps popping up more and more and more in the fintech space. So excited to see you guys like kind of iterate and yeah, go deeper on it. So Lightspark's thesis requires Bitcoin to be used in a sort of invisible background way. Users never see it or touch it; they just get better payments experience. That's a very specific product hypothesis. What has to be true for that to happen in practice? Like, what does it take to make that sort of invisibility, reliability, kind of like the earlier comment of like picks and adoption? Like, how do you get from that idea to a reality in practice?
Yeah. So, like I said early on, we focused a lot on Lightning and using Bitcoin as infrastructure. And so, let's just take that example. If you're moving USD to Mexican pesos, historically we would do it essentially by taking USD, converting it to Bitcoin, moving Bitcoin down Mexico over Lightning, and then converting it back to Mexican pesos and pushing it to a user's bank account using SPAY to a Clave using SPAY. We can still do that, and we do that a lot, but we can also use stablecoins as a rail. And so we can also offer like a stablecoin sandwich, if you will. And as I think about, those options, back to your question, what does it take? I think rails will be adopted to the extent that they can offer more reliable, more economical, and a faster alternative to whatever it's out there. There's trillions of dollars that are still getting moved every day on Swift, and Swift is a 50-year-old protocol that again is just a very core part of our infrastructure. But I'm still to meet anyone that loves Swift and loves correspondent banking. Yet again, it is there. Like I said, there's just massive inertia in fintech. I think Bitcoin turns out to be a very effective way to move funds across borders, or Lightning more specifically is a very effective way to go from point A to point B. And in many cases, it's cheaper, it's faster, it's more reliable than a stable coin. But there are other cases where using USDC, for example, as a rail, or using a stablecoin sandwich is more effective than using Bitcoin. And it's not really our place as Lightspark to dictate, to be opinionated about the rail. I think we focused on the outcomes. We focused on whatever delivers the cheapest, fastest, and more reliable transfer or outcome for our customers, and we orchestrate between those rails. And so I think success for Bitcoin as a network comes definitely from invisibility, but comes from, again, its ability to deliver faster, cheaper, more reliable payments. And I think we're going to get there. And I think on the business side, no merchant should be forced to pick, like, if they want to use Bitcoin or if they want to use stable coins or if they want to use Swift. I think they care about putting putting money in the hands of their customers, and it's our job to help them figure out what's the best path to get that done. So that's been our focus. Bitcoin Lightning happens to be a very effective way to do that. It's not the only, and so we just help our customers make the right choices.
Yeah, no, I love how you all are, leveraging crypto in a sort of like I said, invisible in the background. It's just the better payments thesis. So that's awesome. You're now leading sales and go-to-market at a company where the regulatory environment is still being written as we speak. At Adyen, you were selling to enterprise customers, probably on the strength of regulatory certainty and a pretty like established product. How do you sell infrastructure in a space where the regulatory environment is still being written and figured out?
Yeah, that's a really that's a really interesting question because from the outside, I mean, if you look at traditional payments, it's easy to conclude that that space is fully stable and it's said and done, and it's just, there's not a lot of change there. But the reality is there is a fair amount of change happening in traditional payments as well. Just take PSD2 in Europe and strong customer authentication and that wave, which is still happening, by the way, caused a lot of disruption for a lot of merchants. It forced Adyen and a bunch of other processors to adapt, and it forced the ecosystem as a whole to sort of rethink how things happen and etc. because of that regulatory change. And so it is true that if you look at crypto, of course, there's much more to be figured out, and there's more dynamism in regulations. But it's not that in the traditional payments world, there's no regulatory change. I think if you are in the service provider side and if you're selling infrastructure to businesses, you need to truly just put yourself in their shoes and acknowledge that no change is easy. No, even if it is a very tiny change to the customer experience, that can cause a lot of headaches. That can lead to a spike in customer service calls and all sorts of issues. And so there's no such thing as a walk in the park when it comes to financial infrastructure. It's all complex. It's all difficult. I think for us, we're obviously lean a lot on where there's a clarity and where there's a paved road and where there's more, say, where the frameworks are better established for businesses to build on and scale. But we watch closely what's happening at the edges because customers do want to take advantage of opportunities, even if they are short-lived. I think there are cases where customers will want to operate at that edge and learn and adapt and hopefully build a differentiation from it. And so in those cases, we sit very close with customers. We help them navigate that change. We help them understand the different scenarios, and it ultimately becomes a risk-based discussion or a risk-based decision. I think what I'm trying to say, if I summarize this, is fintech is going to be subject to regulatory changes no matter what and where you operate, whether it's in a traditional rail side or in the crypto rail side. I think, again, for merchants, they don't want to be forced to become specialists in regulations. They really rely on people like Lightspark and others to help them navigate those changes. And I think on our side, we invest a lot of time there. We're regulated. We've got a bunch of licenses. We've got a phenomenal team here that is ready to sit down and support our customers as those changes come up and they play out.
I love it. And to your point, there's always changes. The ground is always shifting, and that's actually a massive opportunity. To our first point of conversation, it's a massive opportunity for the upstarts and growth companies to displace incumbents. So
I'll argue there's never been a better time. And if you walk back 2 decades in fintech, and we talked about Adyen and Stripe, they're both massive today. But like I said, the bulk, like the majority of the money that is still moving in the payment acceptance side is not on Stripe and Adyen. They're still sitting in traditional rails. And so despite their success and despite there being incredible companies, there's a lot of business out there that still will move to Adyen and Stripe, I think. There's a lot of cash out there and checks that will still move to electronic payments. It's a world of opportunity in fintech. And I think it's really exciting that today you don't need to be an Adyen or a Stripe. You don't need to carry a massive balance sheet. You don't need to have a team of thousands of people. You don't need to necessarily get licenses all over the world to build a financial app or to build a business that is helping users move funds across the globe or pay for their goods and services or store balances. You can rely on entities that have done that heavy lifting, and the options for you in terms of how to light things up and turn on those products are amazing. And it's no longer just Swift, for God's sake. In the global money movement side of things, it's crypto rails and a bunch of other very effective ways to move funds. But that same logic applies to payment acceptance. It's no longer cards. It's cards plus wallets plus real-time payment rails plus crypto. I mean, there's just lots of different ways one can help someone move funds or pay for services, or a business to take payments. It's an incredible time in fintech, I'd argue.
Never been a better time to be building here. What excites you the most about Lightspark over the next 12 months?
There's no shortage of things that get me excited about Lightspark. I think one thing specifically that I love about what we're doing here is we're not, like I said, we're not trying to optimize for a rail or a asset or like a specific payment method or a region. We're very agnostic to infrastructure decisions. We are in the business of optimizing all of that plumbing to help companies succeed, to help our customers succeed in the real world. And um, if you think about the real world, as excited you may be about crypto, the reality is there's just a ton of money moving in fiat still, and that will probably still be the case in the next decade or so. And so what that means for businesses is it's very unlikely that any business will completely shift from all of their fiat infrastructure to crypto. I mean, some will for sure, but again, in the grand scheme of things, I think most businesses will need to navigate both worlds. And what gets me really excited about Lightspark is we're helping businesses make those choices, like leverage what's best between fiat and crypto. There are certain markets where um, fiat rails are so advanced, like Pix in Brazil, that is bigger than Visa, Mastercard, and bigger than anything else down there, or UPI in India, where if you want to be successful, you're probably better off plugging into Pix as opposed to trying to convince everyone that uses Pixes every single day to change to something else. And so I think there's a convergence of those two words, fiat, traditional rails, and crypto, that is where a lot of the economic activity will happen, will take place in the next decade. And I think we're really well positioned at Lightspark to help customers or to help businesses make the right choices between like where to lean on fiat rails versus where to lean on stable coins or crypto rails. An example of that is just contractor payments. There's definitely excitement in terms of using stable coins to pay out to contractors or even creators. And in some markets, that makes perfect sense. But there are other markets that people just really need fiat in the bank account, even if their currency is volatile. And so, again, you don't want to just limit your choices to stablecoins only in that scenario. You really want to be able to pay out in stablecoins, but also fiat if users need fiat. So that's what we focus on here at Lightspark. We're not opinionated about those choices. We just help our customers make the right decisions for the benefit of their business and their customers.
Yeah, I feel like if you've been, following fintech headlines in the past 6 to 12 months, it feels like the stablecoin ship has sailed and like stablecoins are off to the races. And it's like, no, it's actually so early. But
So rarely.
to your point, then if you factor in the orchestration between stablecoins and crypto and other payment, like that's even earlier. So it's an exciting place for Lightspark to be building.
100%. We're still very early in those cycles, and I mean it's weird to say this, but even again, if you look at things and if you zoom out even more, like I said, there's just a lot of money that is still moving around, or cash and checks and just cash based payment methods, and so um, uh, even if you are coming from a traditional payments perspective, if you're looking at cards, I mean, there are markets where cards are the alternative, not the dominant. I mean, in the US, people don't realize how big of a problem that is. But again, take Latin America. There are many markets down there where there's just cash flowing all over the place, right? And cards are early. So all it takes is a bit of perspective.
Yeah, exciting time for what y'all are building. For my standard wrap-up question, what's one thing that you think people in fintech aren't talking about enough?
Fintech has been quite active and busy, and so it's hard to find something that is not getting,
There's a lot of conversation
yeah,
on a
yeah.
lot of
There's a lot of
thorny
conversation.
topics nowadays. Yeah.
Yeah, exactly. But look, I don't want to say that people are not talking about this because they are, but one thing that is perhaps like underappreciated is uh, the boring, though very necessary work that needs to take place on the compliance side to stand up every single thing that we talked about here and sustain those things and take them to scale. If you go back a few years and look at the BaaS wave, everyone got super excited about BaaS, and then within reason, and rightfully so. And what we saw was a lot of instances where folks just put the car in front of the horses, and things just didn't go well because they were not paying enough attention to the underlying compliance structure that needs to be there to ensure that things scale. Um, if you fast forward to today, there's a ton of excitement around crypto, and I think that's great. I think that's warranted because, again, it's fascinating to see what you can achieve with crypto. But it doesn't mean that you can just completely go wild west and get products out there and don't think about how to protect consumers and some of those edge cases, how to protect against fraud and money laundering and all of those different challenges that fintech is subject to, and work on that. And so um, back to your question, people are certainly talking about it, um, but oftentimes I see a lot of focus on let's just light this thing up, let's just get it out there, and that's great. That's the right energy. But if you're serious about building a fintech product, and if you're serious about scaling a fintech product, you need to have things in the right place from a compliance standpoint. You need to lean on your partners and their licenses and their frameworks and programs to support your business, because otherwise it's going to be short-lived, as it happened a million times with businesses that just neglected the importance of building those programs.
I'll make sure Lightspark's compliance team gets this podcast sent to them when it's released.
They're great. Yeah, they're really great.
I love it. Well, Davi, thanks so much for coming on. If folks want to find out more about Lightspark, where should they go?
Yeah, so lightspark.com. We're also on X and LinkedIn, so people can find us there. Truly welcome any feedback that folks have, any questions, just send them our way and we'll respond very quickly.
Awesome. Folks, go check it out. Thanks so much for coming on.
Thank you.